What's up everyone, welcome back to another video with the Millennial Finance. In recent times, lots of people have started to see some losses in their StashAway portfolio or see their gains diminish. This happened to me as well. For the first time since I started investing with StashAway, my portfolio actually turned negative. I've been consistently dollar cost averaging into this portfolio every single week since I started about 2 or 3 years ago, so it's not even a market timing issue. As of the time that I'm recording this video, my portfolio actually managed to flip back into positive territory, but I'm much lower down than where I used to be. My total returns have started to dwindle ever since 2021. So today, I'll be talking about StashAway's very recent reoptimization, and we'll find out what's happening with StashAway. Cha-ching! So the first thing that we need to address and acknowledge is the fact that markets just aren't too hot right now. This isn't 2020 anymore, and all of us are starting to realize that investing is not so easy. As in any market ever since, the 1900s, there will be ups and downs, there will be cycles, and right now, we're just in a downtrend. Despite the recent rebound, the Nasdaq 100 is still 11% off its all-time highs, while the S&P 500 is doing slightly better at 6% off its all-time highs. At the lowest though, the S&P 500 was down 15% and the QQQ was down 22%, which puts it in a bear market territory. So as you guys can see, market conditions are just not so good right now, and nearly all investments aside from certain sectors are actually down, so we can't really blame StashAway if the portfolios are down as well. So having gotten that out of the way, let's talk about what StashAway is doing with their current investment portfolios. Before I go into the main portfolios, let me just touch a bit on the thematic portfolios. As far as I know, there aren't any changes here at all. The technology enablers and the future of consumer tech are down pretty bigly for me, but again, this is in line with what markets are doing. Specifically for these two ETFs, tech has just taken a massive hit, which includes the likes of, the QQQ and even ARK Invest. So nothing wrong with this portfolio specifically from StashAway's point of view. It's just that, tech, growth stocks, non-profitable companies, they're just not doing so well. And if that's not your investment style, then maybe you should reconsider removing this money and putting it somewhere else. For me, I still believe in investing in companies that will help shape our future, so I'll continue adding to these portfolios. While doing the research for this video, I also realized that the healthcare portfolio was down very bad. If you guys remember, I actually put more money every single week into this healthcare thematic portfolio versus the technology enablers and the future of consumer tech. So I know how you guys feel, and it doesn't feel very good. I benchmarked this against the stock market as a whole, and both healthcare and biotech stocks just aren't doing so good at the moment. The only things that are actually doing good are oil and minor stocks, and this is because they both are commodities, and that is what is doing well in a higher interest rate environment. So in my opinion, these thematic portfolios are completely fine, and as far as I know, they haven't done any reoptimization here. Yes, the portfolios are just not doing so well, but that's because the sectors that they're investing in just are in sort of a downtrend. Regardless, I'll continue putting my money here because I do believe in these teams for the future. Anyway, let's get to the meat of this video, which is the changes to the main portfolio. So, a few weeks back, it seems like StashAway did sort of a stealth reoptimization. Unlike previous times, I didn't get any notifications or emails about this change. Even though it turned out to be a relatively minor change, it still would have been good to be given a heads up. I'm not sure why their approach now is different, but communication is extremely important, especially in the investment world. To be honest, I didn't even know that it happened till some of y'all hit us up on Instagram, so thanks so much for letting us know. Even when I went into the app, there's no sort of, banner telling us that there's some changes that have been made. And again, unlike previous times, I can't see the details of what has been changed. So I spoke to the team, asked them about this, and I watched an Ask Me Anything video so that you guys don't have to. Let me summarize it for y'all. Long story short, StashAway decided they're not going to invest in China anymore, and specifically the KWEB ETF has been removed from all portfolios in StashAway. This was a manual decision by them, and it also marks the first time that they have manually intervened in the ERAA. One thing I wanted to call out, in the AMA itself, the co-founder of StashAway, which is Michele, admitted that as a client, he was disappointed of the returns of StashAway since 2021, and in hindsight, the over-allocation to KWEB may have been the wrong choice. Then again, everything is in hindsight. If KWEB, instead of going down all the way, decided to go up, then we'd all be pretty happy with StashAway and we wouldn't even have this video. But let's talk about the decision-making process. First of all, I really hate to say that I told you so, but I did bring this up. I did bring up my concerns about KWEB right when they made this change. It was a bold decision that they were making, which I acknowledged, and I didn't agree with it, but I still stuck to StashAway. Then again, no one really agrees with each other in the investment world because, if everyone just agrees, then we wouldn't really have a stock market. Unfortunately for the StashAway team, it just didn't pan out for them. Blow after blow, it all started off, in my opinion, when the Chinese regulators didn't allow the listing of Ant Financial Group. I mean, I did a lot of research, we created a video on it, but because the IPO didn't happen, no one really watched that video. So maybe that's why KWEB went down. To make matters worse, the stance of China in the Russian-Ukraine conflict just spooked away a lot of investors. In just under a month, KWEB fell by nearly 50%, after already falling by around that same amount over the last few months. If you guys think crypto or NFTs are volatile, then KWEB is, it's showing the same price action. From my understanding from watching the AMA, it looks like StashAway decided to exit their KWEB position around the time that it was dropping nearly 10% every single day for around 3 days. Now, KWEB has slightly rebounded and it may seem like StashAway has sold the low or sold the bottom, but I completely agree with their decision. You never know what will happen. It could have dropped more, but it just has rebounded. Anyway, the reasoning for now exiting the KWEB position is that this whole conflict just makes the geopolitical risk a bit too much and there are a lot of unknowns. Because of this, they decided that they wanted to close this chapter and they didn't want portfolios to be so volatile and reliant on what China is going to do next. So I completely agree with this decision, but my only question is, why did this realization only come now? Even prior to the Russian-Ukraine conflict, the geopolitical risk was just way too high in my opinion. We know that China will just make any decision that they want to, they will show public support if they want to, and because of this, the risk-adjusted returns just don't seem so great. Does China have great companies? Well, Alibaba, Tencent, Pinduoduo, those are all great companies that will probably shape our future as well, but because they're acting on the whim of their government, investors just get a bit spooked out and don't want to risk their money there when there's just so many other opportunities all over the world. When investing, or in fact doing many things in life, you always want the highest risk to reward ratio, and for a very long time, I think that China and China tech specifically just wasn't it. On a more broad scope, they also mentioned that they're going to shift their investment style slightly and not just go for very value stocks because I assume they got value trapped really hard. If you read through any of their old reoptimizations, you could have seen that they said that they're rotating from US tech to China tech because there's just a valuation gap there. US tech is so expensive, China tech is so cheap, surely they'll meet in the middle, right? Well, that's not always the case. I always say that things are cheap for a reason, and in the scenario for China tech, I guess those investors even back then knew what was going to come. So I'm glad StashAway finally picked up on this. Valuations are not the be-all end-all. Again, it was something that I brought up when they decided to remove US tech from the portfolios. If you guys want to know, you can just check out our old videos. So all in all, I believe that StashAway is making the right decision for portfolios right now, but it seems to have come a bit late. This is how the current allocation of my 36% risk index portfolio looks like. I can't remember exactly when the changes were made, but China stocks are completely removed even in the Asian allocation. So all of those Asian ETFs that has a large allocation to China, StashAway has completely removed it from the portfolio, and the only one that I have in mind is Japan. It also looks like they're back into US tech, which I'm not sure when this happened, but I'm happy about it, and their exposure to the energy sector has really propped up the StashAway portfolio. I have to admit that I wasn't the biggest fan when they added the oil ETF into our portfolios. In fact, I was making fun of them, but the ETF is now up, 60%, so we have to give credit where credit is due. In terms of international equities, I'm not really sure why there's an allocation to Canada and Japan. I'm not familiar with those markets or economies at all, so maybe there really is something cooking there, but in my personal opinion, I won't be investing in those companies in my own personal portfolio. So yes, I have talked a lot. Let me share my personal views about how I see StashAway moving forward. So being an early investor and advocate for StashAway, I have to say that I am kind of disappointed by the returns and investing decisions over the year and a half. However, I also do appreciate that the team is making bold decisions in their investments and they're not just, following trends, investing in what everyone else is doing. For now, I will be maintaining my position in StashAway. I'm not going to withdraw anything at all, but I will reduce my weekly DCA into StashAway in favor of KDI instead. I'll also be closely monitoring any updates that the StashAway team decides to make from now onwards, and I'll keep you all updated in case there are any changes. So let us know, what do you think about StashAway right now? Comment down below. Thanks for watching this video to the end, guys. Give us a big thumbs up and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.